Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. If you are in the business of looking for a resource mouse pad that can tell you the metric conversions of tires, I've got the deal for you. Go to axontiretips.com and fill out the form, and Axon will send you 2 mouse pads that you can leave on your desk. That way, if you want to know the difference, the extra conversion of a 520 tire, by God, you'll be able to figure that out by using that mouse pad. So if you're interested in doing that, go to axontiretips.com and they'll send you one in the mail. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs at Valley Transportation. Our goal is to help you reach yours. And no matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online. Learn about your financing options at agdirect.com. And this Moving Iron Podcast is also brought to you by Tractor Zoom, with access to over $20 billion worth of heavy equipment machinery sales data. Tractor Zoom's Iron Comp is the industry's trusted solution for transparent heavy equipment values and auctionable pricing insights. Chip is with Blue Reef Agri Marketing out of Morton, Illinois, and he's nice enough to come on and talk about what's happening in the market. So, Chip, how you doing this morning, man?
Hey, doing well, Casey. Interesting markets we got. I might have to get a couple of those mouse pads. I'm old enough to remember when they tried to. I think I was about 5th grade, maybe, and they came up with this great plan. We're gonna go to the metric system. Forget this miles and yards and all this stuff. We're gonna teach everybody the metric system. Didn't go so well. Lasted like maybe one school year, and then they decided, nobody knows this. We're too entrenched in feet and inches in miles. So it didn't go very well. But I'm old enough. I remember that, and I'm doing all the conversions, and so I need one of those mouse pads. I still get it mixed up.
Yes, I'm sure several people got several speeding tickets for going 120 miles an hour.
Yeah, that's right.
20 kilometers an hour. Right.
Exactly.
Right. So a couple things. One, we've got a ton of stuff going on. There's plenty of information out there about all this recession talk and this, that, and other thing. Well, there's starting to get a hard line in the sand between camps. We have a camp that says, yep, absolutely going to happen. No doubt about it. Recession's coming this fall. And then there's another camp that says, this fall we're going to have something, but it's not going to be a recession. We're going to start turning that corner. So all kinds of push and pull here. But right now, I read this Valley Transportation reader every morning when I do this. And I think about the $5 and $6 and $7 diesel prices that we're seeing out there in the marketplace right now. And even though, a good point was made the other day with Rich Possum when he was on the podcast, was that fuel costs are at all-time highs, but the price of oil is nowhere near an all-time high. And I guess as you take a look at that and what you see going on right now, oil's getting banged up right now in the marketplace and on the market. I guess what are your thoughts about energy right now?
Yeah, I think that that's going to be the battle. I mean, I'm not an economist. I have an econ major, just a bachelor's, but I pride myself in not being an economist. I know supply, demand, price. Price is the ultimate, bullwhip. It'll crack you right in the face. And I would say any way you cut it, whether it's a slowdown in economy because of high prices, particularly energy, or whether it's interest rates rising, something's going to slow us down. And I would argue that you're already into a recession. You already have 1 quarter of negative growth. All you need is 2 officially for a recession. This energy thing, it's just borderlines comical. It's like the Keystone Cops. It's like, well, you hit the nail on the head, right? I'll just right now, as we're speaking, it's 7:25 Central. Crude oil is down $5.83. It is probably about it's trading just round it up and call it 104. And so you're about $16-17 off of the recent highs from last week. However, the products, heating oil and gasoline futures, are nowhere near that far off the highs. The problem is the refining problem. I'm not even in the energy sector, but yet we're doing all these things to try to fix Putin's inflation. Going to release some more barrels out of strategic petroleum reserve, right? It's a refining issue. We need to build more refineries. We need to get the oil where it needs to be at the refining plants to fix this thing. And now we're going to try to do away with the federal gas tax for 90 days. Well,
what good is that? That's a joke. What's that?
None of that stuff decreases demand.
No,
it increases demand. We don't need to increase demand. We need to slow demand down. And we're going to throw everything against the wall to try to increase demand, talk these prices down. Well, unfortunately, lower prices don't slow demand down. Taking the gasoline tax away and making it cheaper doesn't slow demand down. And so, it just seems like the higher up the echelon you go in economics levels, past bachelor, and there's probably a lot of PhDs in economics in Washington advising the current administration. It seems like they regress backwards on common sense and try to, redo the laws of economics. So that's my diatribe there. We are seeing a big correction of crude oil. You're getting on a chart to an area here, just call it 103-ish. It's drawn off a weekly chart from the lows back in mid-March. There's a trend line. We're within shouting distance of that. If that gives way, I think that you quickly be under 100 down into the mid 90s. There's a bigger trend line there. I've said all along, and even on this podcast, Casey, as crude oil goes, inflation goes. That's where the money goes. And, you have to wonder now, have we run the course on this inflation thing? It doesn't mean it's going to go away overnight, that, $5 gasoline and $6 and $7 diesel fuel is going to go away overnight. But maybe the money is starting to get pulled out of the inflation trade. It is a futures market. We look way out ahead. And so maybe the market's looking down the road and saying, well, the Fed's going to overshoot. We're going to go into recession. We're going to blow people up again, much like 2008. But then the next, leg of that is going to be quantitative easing. We're going to lower interest rates. We're going to stimulate the economy. And so the market is a futures looking market, and it may be looking out ahead. And I guess the take home for me is, are we starting to show some cracks in the inflation trade? And, the action of crude oil last week and then so far this week makes you wonder if we're not. It's weighing on the grain markets as well. Beans didn't have a very good trading session yesterday. They're double digits lower now. Corn tried to rally, but now it's getting beat up. The stock market again is 400 lower on the futures right now. So scary times out there. And underlying all that, you probably have farmers out here listening, saying, "Hey, what's that have to do with my corn yields, my bean yields? It's 105 degrees and it hasn't rained in 3 weeks." And so that is happening as well. We've got a weather situation that is not real great out there. I know there's been some scattered rains around, and the crop is holding up okay right now in late June. But if we rip the page off the calendar into July and we keep this high pressure ridge and triple digit heat and no rain, things are going to deteriorate quickly. And so it's just as cloudy as it ever has been, trying to read the tea leaves here. But Mother Nature will have the final say as far as the grain markets go, in spite of what the outside markets and this inflation talk might be doing.
Yep. So let's talk a little bit about what's going on the crop progress side of this. So corn, you got 95% emergence, 70% rated good to excellent. That was 72% last week. So like you talked about, starting seeing just a little bit of a slide there, but nothing. I mean, that's 2%, and a lot of things could go a lot of different directions to make that 2% pop up. Soybeans, 94%, planted 93%, is what the average is. 83% emerged, 84% last week, 68% rated good to excellent. So right now, as you look at the corn crop, looks like a good crop, right? You got a lot of big numbers out there, but it's still early, like you just talked about. Spring wheat is kind of the tell of the tape here. You look at the overnights right now, spring wheat was up at 18 to 20 cents higher, roughly. I mean, it had a huge run up. Hard red winter wheat was up 13 to 15 cents in the overnight. So, I mean, there's some stuff there. If you look what's going on there, 95% that's headed. and I'm going to talk about wheat here when I get into talking about this. So 95% headed, it's head of average, 25% of it's harvested. Cotton, cotton's right where it should be, 96% planted, 22% going on there. You got bowl setting and everything else. So everything's moving the way it should be moving. Things are looking like it's going to go well. The folks you've been talking to out on the wheat run right now, have you got a good feel for the yields that you're seeing so far in this first half of wheat harvest?
Yeah, about as expected, which means not very good in the plains. Right. I saw in that harvest progress, we're getting, on the downside of harvest in Texas and Oklahoma. We're rapidly moving and advancing into Kansas. Not very good out there. A lot of single digit to 20 bushel wheat. I think that was about as expected. The wheat tour a month and a half ago, I think pegged it pretty well. Mm-hmm. Over in this part of the world, there's not a lot of wheat. That's soft red, and it's pretty decent crop. We had the right winter, the right moisture this this spring, and we finished that crop well. So all told, I don't think it's anything outside of the realm of what the market had been thinking. We're getting deep enough into it that we should be kind of quickly getting past this harvest pressure type situation. That was the excuse. I'm not so certain that had a massive influence on this latest break, but it probably didn't help us. The wheat market tried to stabilize overnight. We had some more weakness, got down to 960 on the front month in July. That's a pretty critical support area. We bounced pretty sharply off of that, a 47-cent rally very quickly off of that. And now we're back about 20 off of those overnight highs. So very, very volatile situation. The wheat market is probably getting close to support, but we're going to, take a cue from the outside markets. And right now, crude oil just continues to weaken up here. It's down $6+. And that's kind of the weight on everything, because there's a lot of money that's been poured into not just the grain markets, but kind of a entire basket of commodities. And now, I think everyone like myself is sitting there saying, hey, is this inflation thing, going to get readjusted, and we're going to pull a bunch of money out of the inflation trade across a lot of different sectors. And that can happen fast. Maybe that's already started, arguably, with the action of yesterday. It was kind of a strange day yesterday, because the weather forecast, it did get slightly cooler and just a touch more rain. But it wasn't the dramatic shift that you would have expected for them beating the markets up like they did and following through today. It's still relatively dry forecast and relatively warm, although backing off on the heat maybe a few days and pushing that ridge to the west. But there's a lot of hints that it comes back into July. So, right. I mean, it's not like totally a great forecast and everything's fixed. We're going to get rain and save this crop. It has been holding on. You mentioned some of those numbers as far as the crop conditions go. We did see a little bit of a deterioration, particularly in Illinois, and I've heard that here. If there's any time on the production calendar where you want it to be dry, it's about right now. I mean, because it's probably not doing a lot of actual yield damage right now. But I did yesterday start to hear producers saying, my crop looked great until Monday. And then it started going backwards and it looks uglier. And again, I'm not saying we're doing yield damage to it, but we're going to need some rain quickly. We got like a 30% chance tonight, and then it's cooler. It's not 100, it's 85 to 90, but still not a lot of rain in the forecast. So my point with this is this crop is going to, without moisture, quickly, this crop is going to go backwards fast. And I think that although the crop conditions on corn only went down 2%, Illinois had a big drop. I think that the biggest drop out there was Illinois. And if you look at the past 14 days precipitation, Illinois kind of missed out for the most part, other than a couple isolated pop-up showers that we saw because of the heat.
Yep. Okay. All right, let's talk a little bit about, talking about heat. We've had some unfortunate cattle things happen in Kansas. Had a bunch of cows just go, die. But I kind of understand, if you read the reports and kind of see what happens. I mean, talking with my family back in Kansas, I mean, it went from being 80 degrees to 105 degrees. And the one thing people don't really understand about the state of Kansas is that it's a very humid state. There's a lot of humidity in Kansas. Growing up there, you don't realize how much humidity is there till you go live in the desert for a while. Then you come back and it's bad. So you hit those high dew points and those kind of things, and you start seeing these things happen when you have these flash, pop-ups and heat. We go from 80 degrees to 105 for 10 days straight, and high dew points and high humidity. It plays an effect on livestock. So I guess looking at the cattle market right now with what we've seen happen right there and already having a fairly tight supply, but to kind of go back into this inflation recession talk thing with the cattle herd the way it is, and you start looking at, the available, demand signals that you're seeing out there, could the herd thing be as bad of a situation that we think, just because of there may not be as many people out there buying, $17 T-bones and those kind of things?
Yeah, I think that's something that's held us back, quite honestly. I don't think that the cattle market's immune from that. They take a lot of their at least short-term trading cues from the equity markets, and there's certainly been a lot of pressure there. Although that's a horrible situation. The market's holding together. I mean, I guess I would say we're in kind of a volatile value area here. The market tried to rally, couldn't hold that together. We got a cattle on feed report coming out Friday after the close, and it's still expected to show very close to record numbers on feed. So we still have a lot of animals on feed out there, and that's something that's hung over us for quite a while. I think we'll slowly turn that corner, but to your point, the big question here is, can consumer demand hold together through this inflation, right? $5+ gasoline, and just across the board, gasoline and food have been the two biggest pushes on inflation. So that's going to be the question. Also, our exports have been really strong to record amounts. And, through all this, the dollar's been pretty strong. Is that going to be something that slows, our export situation down? Japan's one of our biggest buyers. They've got some, fairly critical financial instability going on there.
Yeah.
And so that's the question on this deal. I think longer term, I've been very bullish the cattle market, just based on shrinking numbers and the amount of cows and breeding stock that we had to liquidate over the past 18 months. But, that can definitely be balanced by demand shrinking as well. It's two sides of it, right? It's supply and demand. The supply eventually is going to shrink. I mean, I think that's pretty clear. The question is, can the demand hold together? And we'll just have to see on that. But we're holding it together. That's the thing. This lower corn market, has the feeders, up near multi-week highs. So, feeders out there, I guess, silver lining of, from the feedlot industry is corn's off the highs, and that's a good thing. And feeder cattle are getting supported here because of that. So, it's a margin business, and you've got corn on the one hand and feeders on the other, and fat cattle prices and demand's thrown into that pie as well. So it's less than clear out there, but so far I think the bright spot is that cattle market's holding together pretty well. The cash markets, stabilized, and in spite of this big break in the stock market that we've seen, I think the cattle market's held it together pretty well so far. Knock on wood.
Okay, so take a look at what's going on in hogs right now. You've had a huge spike up in hog price. You see a big run up here. You got the Chinese hog market is in the toilet, basically. It's a struggle right now to keep that thing moving. They hinted around about some African swine fever popping back up, but you can't really get a straight answer what's really going on over there. So looking at the hog market, are you seeing some spillover demand buying from the public going over to pork with the price of beef the way it is right now? Is that kind of what you think maybe be happening, or do you think there's what else is driving that?
Yeah, no, I think that's a big part of it. I think we're seasonally in a time frame where you see the lowest kills on the hog side and the highest demand. And, I don't think that high beef prices are hurting the hog market and pork demand. Let's put it that way. So my fear with this is, though, that, things were kind of out of the normal seasonal cycle. We had those near record highs several months back. It was kind of at the wrong time seasonally. The market's trying to rally back now off of recent lows, and we're several dollars off those lows. But the clock, every day that goes off the calendar, is that much closer to, where the numbers start getting bigger and, demand tails off a little bit. And so we're kind of coming into the latter part of the seasonal price peak window. I think we really have to keep that in the back of our minds, because I don't think hogs are going to be, immune to this. If the inflation trade is over, and that's a big if still, hogs won't be immune to it. So, my point with that is, seeing a nice rally, I for one, have the yellow flashing light in the back of my brain going off saying, hey, we got to keep a close eye on this hog market, because every day that goes by is closer to, when we normally see our seasonal summer price peak. So I think we need to keep a close, diligent watch on hog prices. They are acting okay. The cash market's rallying. There's not much premium that the futures have. So I think that's helping, create a tailwind and pushing us higher. But I think we got to keep a close eye on it, especially, if we get up closer to, $90 on some of these winter contracts. And, the August, right now closed yesterday, 109.60. You get those up another $3-4, and you really have to be taking a close look at it from a production side and from a risk management side.
Yep, right on. All right, good stuff as usual. Chip, folks want to reach out to you and get more information about what you're doing over there at Blue Reef Agri Marketing. What's the best way to do that?
Yeah, best way is just call our office, 309-550-7213. We'd be happy to chat with you and kind of review your plan, extra set of eyes and ears, because it's definitely getting difficult out there in very choppy, turbulent times.
Yes, very much so. Chip, appreciate you being on the podcast, man.
Thanks.
I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast and check out the YouTube channel, Moving Iron Podcast, for the video version of this podcast. My good friend Alex Shevchenko is over in Ukraine right now, passing out humanitarian aid on his own dime. So he's doing the Lord's work there on by himself. If you'd like to help support Alex, he's got a GoFundMe page set up. Go to GoFundMe.com and check out help Alex transport humanitarian aid from Poland to Ukraine. And in the show notes, there'll be a link that you can click to go to donate there. So if you want to do that, help Alex out, go to the GoFundMe page there and donate. If you want more information about what's going on with Moving Iron Podcast, go to MovingIronLLC.com. You find all the information there, especially the information for the upcoming Moving Iron Summit in Nashville, Tennessee, September 6th, 7th, and 8th. If you're a dealer of any kind, whether new, used, or otherwise, you want to check that out, send me an email at MovingIronPodcast at MovingIronPodcast.com, or you can just apply right there online, and we'll get you all registered up there. So with that, I am Casey Seymour with Chip Nellinger. Let's go move some iron, folks. Out.
Iron in the 21st century. Hard work.